What is up, guys? Welcome to the channel. Cryptocurrency investors are witnessing the worst dump that we have seen so far in 2021. We're going to take a close look at all the pullbacks that have occurred this year, take a look at the pullbacks that occurred in 2017, and also really get into why I believe that this is really a whole bunch of FUD, and in all likelihood, this is not the end of the bull market. And if it's your first time stopping by and you are someone who considers themselves serious about investing in cryptocurrency, don't forget to subscribe to this video in the lower right portion of the screen somewhere by my face. And so let's just jump right into this video by giving you guys some historical data about some Bitcoin pullbacks. This is Bitcoin specifically. Bitcoin pullbacks that we have seen in previous bull markets. Now, the data you're seeing here ranges from 2016 through to 2017 or beginning of 2018. And as you can see, most of these pullbacks are greater than 30%, actually all of them but one, from the peak to the valley. And what you're going to notice if I show you the pullbacks that we have been witnessing after our third halving and the current bull run here is ours have not been as significant. Now, there are a couple conclusions we can draw from this. One, you can say that the market is stronger in general, and you can say that Bitcoin is becoming less volatile as its market cap grows. Because keep in mind, just because we're a little bit under $1 trillion, Bitcoin has been, as of late, a $1 trillion asset. And if you've been paying attention to what has been going on as far as all the institutional adoption and all the financial products that are being created surrounding it, then you would believe that it will go higher than $1 trillion in the long run as well. So let's take a look at these pullbacks. And what I want to point out is this is from the highest high to the lowest low before setting a new all-time high, right? So peak to valley, new all-time high. Peak to valley, new all-time high. Peak to valley, new all-time high. And now you can see what we're doing now and how this differs from what we've seen this year in 2021. So that's really important for you to understand. So 29% pullback, 26, 18% pullback. Again, those figures are lower than the ones we saw here in the past during the 2017 bull run. But let's talk a little bit more about this one. This is the current pullback that we are in. And from peak to valley here, we are down roughly 34%. And if this were to extend the full 38%, which was a popular number we saw multiple times in the last bull run, then we could fall as low as $39,000 or $40,000, which is very possible and is a level I've seen other analysts talk about this week as I've been kind of just doing my research for this video and watching to see what other people are saying and reading up on it. So that is something I want you to keep in mind. So this all goes to show that these dips are normal in a bull run, and I haven't really said that to you yet. So even for as much pain as we've seen in Bitcoin, coming down from 64,000 all the way down to about 42,000, what do we see? $42,035 Bitcoin, and the dump may or may not be over. We're seeing a lot of volume today, but really we need to see this type of volume on hopefully a green candle. So we could be in for another 24, 48 hours of more bleeding here. Or we could be consolidating for a period of time. The market can do anything at any time. That's something that all traders and investors have to eventually come to grips with. Even analysts like myself, the really good ones come to a point where they understand that. The best traders in the world understand that. But let's take a look at how low we can get and some other factors that we could look about when we analyze these charts to give us this type of information. So if we were to fall lower, if this wasn't the low, which I'm telling you, if we close today out, we've got another hour till our daily close, but if we close today with a big red candle here, it is possible that we're going to go lower. Now, if you look over here, you see a very important local top here, and this high was around $41,500. Now, if you see this rectangle I drew here, this represents a resistance area that showed itself multiple times earlier in 2021. And one thing that we know about past resistance is that in a perfect world, it will become future support. And now on the way down, we've broken multiple support levels. Like you could just see here, if I take a trend line, right? Now we broke on the way down. First, we broke through this support level here. Then we had to break through this one. Most recently, we broke through this one at 46,000, right? And you can see that level was acting as support. We tried to break it multiple times, and we finally did. And now as we cruise lower, we're always looking for the next support level. And this is a critical one, guys. This is a critical one because it dates all the way back to January 1st of 2021. And if we break below this one, things could get a bit uglier for sure. The other thing that's really important about this particular critical level of support is it coincides with our 200-day simple moving average. And if you don't know this, one of the defining characteristics of a bull market is that you are trading above the 200-day simple moving average. In a perfect world, you're trading above the 100 and the 50 too. That's if the market's really on the rise, which obviously at the moment we are not. But you want to see this level hold here. So if we were to come down to, let's just say, roughly $39,700, right? If Bitcoin were to drop that low, at that point, we would want to see a serious bounce upwards off of that level. If we don't see that, then we could be in for some more pain. Now, in a worst case scenario, let's say we hit this and we fall below the 200-day simple moving average. First of all, that would be potentially a really bearish sign. That could mean that this bull run is going to be on hold for an extended period of time, or potentially it could be over. Now, if we don't get the bounce we want when we fall here, the two other levels I want you to have on your radar are $3,500, right, which is another level here that we saw come into play. And then this one here would be very critical. This would be basically $30,000. If Bitcoin were to fall below that, which, by the way, I highly doubt, and in a minute, I'm going to explain to you why I do believe this is all just fear, uncertainty, and doubt. It's all FUD, guys. And if for some reason we fell below $30,000, then, we could be coming down as low as $20,000. I highly doubt we're heading in that direction right now. And let me tell you why. So one of the newsletters I subscribe to is just the Palm Beach Daily. And they give you market analysis. They give you insights. And one thing they started talking about in this particular write-up, which came out this morning, was they were talking about Elon Musk, talking about the waves he made when he announced his company would no longer accept Bitcoin for payments, right? So Elon Musk has been stirring the pot here. He has totally done a 180 on his stance on Bitcoin. Just a few months ago, he invested $1.5 billion, or he had Tesla, his company, invest $1.5 billion of its corporate treasury into Bitcoin, and he started accepting Bitcoin payments to buy Teslas. Now he backtracks, and he says, we're no longer accepting these payments, and the reason he's saying this is because of environmental concerns. And more specifically, he's went on to say, Tesla has suspended vehicle purchases using Bitcoin. We're concerned about rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel. So how much energy does Bitcoin actually use? That's the real question here. Bitcoin mining uses 110 terawatt hours of energy and produces 70 metric tons of CO2 annually. Now, if you compare this to the banking system, they're going to use 700 terawatt hours as opposed to 110. And they produce 400 metric tons of CO2 every year as opposed to 70 metric tons. And then if you compare Bitcoin to the gold industry, you can see that the gold industry uses 265 terawatt hours of energy and produces 145 metric tons of CO2. So banking and gold mines use 536% and 141% more energy, respectively, than Bitcoin mining. As I read on further here, I really wanted to share this with you. Unlike Wall Street and gold miners, Bitcoin miners are taking steps to actually reduce their reliance on fossil fuels. So this is actually happening. And according to a study from Cambridge Center for Alternative Finance in 2020, about 76% of crypto miners use a mix of renewable and traditional energy sources to power their operations. Same study also found that about 39% of crypto mining's total energy consumption comes from renewable sources. So what does this all mean for you as a cryptocurrency investor? What does this all mean for the markets? Well, truthfully, I believe that even though Elon Musk is a billionaire, he's an influencer, and he happens to own one of the top companies in the world, I do believe that he is just one person, and that is just one company. And this narrative is really only being fueled by one person. So this does not change the fundamentals of Bitcoin. Bitcoin is still a deflationary asset. It still has lots of scarcity, and the allegations he's making about the mining and the energy costs are not even 100% true as compared to Bitcoin and the banking, right? Which is a very logical thing to compare Bitcoin to, because they're also world-renowned stores of value. And then to go back and touch upon what I spoke to you about earlier in this video is we haven't even reached the 38% decline that we saw multiple times in the 2017 bull market. So this is still, for as painful as it's been, this is still falling under the category of a normal Bitcoin bull run correction. And I'm never here to give you financial advice, but for me, I will be buying into the weakness here. Always remember Warren Buffett, one of the most famous investing quotes ever. We be greedy when others are fearful. Right now, people are fearful, which means there is most likely opportunity to make significant profits. Thanks for watching, guys. Enjoy the ride, and I'll catch you in the next one. Later.